Well, we're in a Friday trading session here. You're heading toward the weekend. It's been a short trading week, but boy, it's been a volatile trading week, at least up to the present time. And let's take a look at the corn market here. After we had some very strong export sales numbers that came out this morning, the market fell asleep. We opened up about a penny higher. We have July corn down 2 3/4 now at 391 1/4. And December down 2 1/2 at 411 1/4. That's on the low of the day right now. Let's talk about that with Scott Gecas. He is with Longleaf Trading. He's there in Chicago and joining us right now. So turn around in the corn market here today. What does that mean?
Yeah, I mean, with the corn market, everything's going to be being focused on all the weather. It's very dry. It's very higher than normal temperatures. There's not a lot of rain. So that's what's going to be the main focus in the next few weeks, driving the corn market one way or the other. You know, the trade war talks is definitely in focus. It's having a negative effect, pretty much everything across the board, anywhere from soybeans to hogs to pretty much anything commodity related. So we're going to see how that's always going to be playing out. You know, the summer volume did start kicking in about 3 weeks early. So that is going to be an attribute to the volatility. So you can see the markets moving, you know, very whippy on light volume. I expect that to continue until something happens. Right now, the only thing that traders are focusing on are just the headlines coming across.
All right, Scott, have you noticed a lot of activity in the options pits lately on the grain side?
Yeah, and that's due to the headline risk. You know, the option volatility has been steadily, significantly higher. Always going into a Friday, you're always going to see that little pop in volatility just in the front month, just for the protection, because no one knows what's going to happen over the weekend.
Okay, let's take a look at our soybean trade. And we had good sales, the weekly sales for soybeans too, over 1 million tons. And almost half of that was to China. I thought that was noteworthy. Let's take a look at our soybean market right now. We are down 2 1/2 at 10.16. Now, early on in the overnight trade, we were up at 10.26 1/2. So we've given back over a dime of that now, almost on the low of the day. November soybeans down a couple of pennies at 10.32 1/4. It doesn't look like anybody's concerned about weather here.
Yeah, and the soybean market is really odd because you have all the problems in Argentina and Brazil. You know, that port's been closed. They actually ran out of soybeans. You know, they halted the vessel loading period. So, and with China, you know, buying more soybeans, you know, I would think that, you know, that's going to be a bullish tone going forward. But you've seen the soybean market sell off a little bit here just recently. You know, the 3-month channel has been around 10.50 to 10 even.
So it seems like everybody's pretty content that the crop is getting off to a good start and just no reason to push it up at the present time, I guess. Is that how you read the tea leaves then?
Yeah, that's been consensus for the last few days here.
Okay, let's look at the wheat trade then. Here on the wheat, in Chicago July wheat, we have been under significant pressure today, although we're coming a couple of pennies off our low. We have July Chicago wheat now down 5 3/4. We're at 5.20 1/2 per bushel. In Kansas City wheat, we have that July contract dropping 8 cents now at 5.34 1/2 as the combines are rolling in the southern plains. Minneapolis wheat, here you have July trading 6 3/4 lower at 6.05 1/4. And that is over, well, it's exactly 8 cents off our overnight high in the Minneapolis spring wheat trade. Did that surprise you that it's seeing losses like that there?
Yeah, I mean, with the wheat market, it's been a tough just globally, just across the board. Very dry, very humid, not a lot of precipitation. You know, even coming through the Russian winter wheat, you know, due to the dry weather and climate there, it's dropping by 10%.
Okay, a quick look at our cotton market here. Let's take a look at July and December. And on July, we are still 38 points higher at 93.53 cents per pound. December new crop, well, it's 71 higher, and now we're at 92.35. It got as high as 93 cents earlier today. We'll come back in a moment, and we'll visit more with Scott Gecas of Longleaf Trading about our livestock trade after this message. Come on back. Scott Gecas rejoins us now. He's with Longleaf Trading in Chicago at the edge of the trading floor right now, and wanted to talk about the influence from the outside markets here on the ag commodities. We had the Dow this morning that surged ahead. We have a look at it right now in New York. Still over 200 points higher. We are up 225 now at 24,640. You know, in days past here, Scott, it used to be they said if the Dow would surge like that, that would be helpful to the cattle complex. That would tend to indicate maybe a better economy, maybe more demand for steaks and that sort of thing. Don't know if that's the case today. Let's look at our live cattle board and see just what's going on in the cattle complex here. Cattle prices have been under a little bit of pressure here today. We have the nearby June trading about 13 cents lower at 104.92, so it's off of our earlier high of the day by about 80 cents or so. We have August down 40 at 103.55. Feeder cattle trade. We also have the feeders trading lower now. August down 48 at 146.92. September down 18 at 147.12. Remember, we had that really low placements number, about as expected, though, that came out from USDA about a week ago. Is that what temporarily propped up the feeder cattle market for a couple of days, but now it's kind of worn off?
Yeah, definitely. You know, the trade war talks is still around even with the cattle. You know, the cash traded around 110. But it's starting to steady off, so that's supportive of price. You know, that sharp sell-off that was all back to, you know, the beef is not just holding, you know, the prices. You know, it's that seasonal demand, it just hasn't been showing up. So I think that's one of the reasons why you're seeing a big slide in cattle.
Beef prices today on the midday update, we have the cutout values that came out from USDA, and they were mixed. We had the choice cuts actually going down 18 cents. They were priced at 228.02 per hundredweight. And select cuts, the cheaper cuts, they actually firmed up 62 cents. And they were priced at 205.09. That puts that spread now at 22.93, so it's a little, still a little under $23 apart. So a mixed action on the beef cutout values, but if you look at the pork cutout side, carcass values were down over $1.50 today, Scott, and then you had the belly market actually gaining almost $5 at 124.81. Let's look at our lean hog trade and see what it's doing. Is it following the lead of the carcass values or the bellies? Well, today it's following the bellies. June up $1.06 at 77.68, and July lean hog 62 higher at 78.67. That's only a dime from the high of the day. And I noted yesterday, last couple of days really, the cash hog market seems like it's on fire.
Yeah, you know, it's really odd that you're seeing a little bit of strength in a hog market now. The whole trade war talks and the tariffs, and in Mexico retaliating with tariffs on pork. You know, Mexico is the largest importer of pork. That's a very detrimental effect that's going to have on prices. You know, also, you know, you have a record supply coming in. You know, slaughter rate was higher than last year. Production is still going up. It's up 5% versus last year. You know, it's expected that production from the second quarter to third quarter is going to increase to record levels even higher than 2009. That's significant. I expect some selling off, some heavy selling pressure in the next couple of weeks with the hog market, unless if anything changes in the headline risk with, you know, the trade war talks with Mexico and stuff like that.
Export sales on pork were 21,800 tons as reported by USDA this morning. And as you mentioned, the biggest buyer was still Mexico, and they were in there for 10,200 of that total just by themselves. So NAFTA talk or not, they're still a strong buyer of U.S. pork. All right, thank you, Scott. I appreciate that so much. You have a great weekend. Scott Gecas of Longleaf Trading. He's located in Chicago.